The moment your side hustle clears $1,000 in profit, the IRS starts an invisible clock. And if you don't hear it ticking, it costs you 7 to 8% annualized in penalties, on top of the tax you already owe. Here's what nobody told you when you started that Etsy shop, drove for DoorDash, or landed your first freelance client. Your W-2 job withholds taxes automatically. Your side hustle doesn't. Every dollar that hits your account is a lie, because roughly 30 cents of it already belongs to the government. Stick with me. By the end of this video, you'll know exactly how much to set aside, when to pay it, and the 2 write-offs that could shrink your bill by thousands. Let's start with the number that shocks people. Self-employment tax is 15.3%. That's before income tax even shows up. 12.4% goes to Social Security on income up to $184,500 in 2026. 2.9% goes to Medicare, and Medicare has no cap. Every dollar you earn forever feeds it. Why so high? Because when you work a W-2 job, your employer secretly pays half of this for you. When you're self-employed, you're the employee and the employer. You pay both halves. Now stack your federal income tax on top of that. For most people in this audience, you're looking at somewhere between 25 and 35% of your side hustle profit going to taxes. So here's the rule. It's called the 30% sweep. The day a 1099 payment lands in your checking account, you move 30% into a separate savings account. Not next week, not when you feel like it. That day. Automatic transfer if your bank supports it. That money is not yours. Treat it like sales tax at a store. You're just holding it. Why a separate account? Because if it sits in checking, you will spend it, I promise. And when April hits and you owe $4,000 you don't have, that's when the penalties compound. Which brings us to the deadlines. The IRS doesn't wait until April. If you're self-employed, you pay taxes 4 times a year, quarterly. For 2026, mark these down: April 15th, June 15th, September 15th, and January 15th, 2027. Notice something weird? Those aren't equal quarters. The second quarter is 2 months, the third is 3, the fourth is 4. Nobody knows why. It's just how the IRS does it. Miss one and the penalty clock starts ticking from that date. Now here's the escape hatch most people don't know about. It's called safe harbor. If you pay in 100% of last year's total tax bill, spread across those 4 quarterly payments, the IRS cannot penalize you. Even if you owe more this year, you're penalty proof. One caveat: if your adjusted gross income was over $150,000 last year, you need to pay 110% instead. This is huge for anyone whose side hustle is exploding. If you made 10 grand last year and 50 grand this year, Safe Harbor lets you pay based on the 10 grand each number and settle up in April. No penalties, you just need the cash ready. Okay, now let's shrink the bill. 2 write-offs that pay for themselves if you actually track them. Number 1, mileage. In 2026, the IRS lets you deduct 72.5 cents per business mile. Drive 100 miles to meet a client? That's $72.50 off your taxable income. Rideshare drivers, delivery folks, anyone driving to markets or client meetings. This is real money. Use an app. Track every mile. It's the closest thing to free cash in the tax code. Number 2, home office. If you have a dedicated workspace, a corner, a desk, a room you actually use only for the business, the simplified method lets you deduct $5 per square foot up to 300 square feet. That's up to $1,500 off your taxable income, with almost no paperwork. So here's what I want you to do today, not tomorrow, today. Open a separate high-yield savings account, nickname it tax. Set up an automatic transfer that moves 30% of every 1099 payment the moment it lands. That's it. That single move puts you ahead of 90% of freelancers. If you want to know exactly how to plug those 2 write-offs into your quarterly payment math and how to estimate your first payment without a CPA, that's the next video in this series. Drop a comment with what your side hustle actually is. I read them, and it shapes what I cover next.